Time frame for Bitcoin. Um, Little weird here. We kind of actually want to just slightly discuss this and then come back to it, because really the only analysis to be made here on the daily is, hey, our market structure is making higher highs and higher lows into price discovery, and that hasn't changed. So we should just continue expecting that. Right? We should just continue expecting higher highs, higher lows, price discovery, absurdly high fib targets. You know, the moon is your target, and everything else is just out of the window. Right? Bears are dumb, all that stuff. The problem is, we're breaking our 4 hour market structure, which means that we're potentially locking in a lower high on the daily. Right? So if we're making this market structure analysis, and again, market structure is interpretive, so there's a bunch of different ways that you can argue this, right? Maybe you see this entire leg upwards as all one move. Maybe you see this leg is all one higher low. Maybe you see this entire leg as a higher high. The way that I currently see it is I saw this as a high, this is a higher low, this was a lower high. Somewhere along these lines, we're breaking our 4 hour structure, we're losing hourly 200s. We're doing certain things that make us think, all right, that's our lower high on the daily, right? And from there, we either get a higher low and then some sort of weird consolidation, or we get a lower low and then we're downtrending amongst all time frames. So from there, we got lower low, right? So then after that, we're expecting lower high. Oops, sorry. We're expecting lower high, and we got that. Great, perfect. The trend is trending. We expected a lower high, we got one. We then found higher low and higher high. So at that point, now we're uptrending again, right? You have low, high, higher low, higher high, higher low, higher high, higher low. What should you be expecting here? What is your trend telling you to expect? A higher high, right? If you lose your 4 hour trend, if you break below certain levels, what's stopping you from finding a lower low somewhere lower than this low after having already found a lower high on your daily? And the answer is probably not much, right? Your next key level really is 4 hour 200 moving averages, which are doing something like this, right? Then the next level after that is this big old 59K weekly demand zone, major level, right? So you probably shift your daily structure bearish, uh, and that's where things kind of get odd, right? Because we're expecting a trend. We're expecting not just a trend, but an uptrend. And so if we flip that uptrend into a downtrend, as we've basically already threatened that this is going to be a lower high, right? So if we find a lower low, now that means that we're downtrending amongst all time frames into some really key levels. Like these 4 hour 200 moving averages are nothing to scoff at. Let's go ahead and just turn everything else off. Let's just look at 4 hour 200 moving averages. Consistent macro bottoms. This is March of 2020. That's that absurdly crazy black swan event, whatever. Macro bottom, macro bottom, macro bottom, macro bottom, right? Macro top, little tiny bounce, using them as a bottom, consolidating below them, breaking above, starts that new bull market. Macro bottom, macro bottom, macro bottom, macro bottom, macro bottom, macro bottom, right? Over and over and over again. So during that bull market, we're saying, hey, as long as you maintain these 4 hour 200s, there's really not too big of a bearish argument, right? There's really nothing telling us why this time would be any different than this time, right? Or the time before that, or the time before that. And that trend continues for several months. Right? Then finally losing them is when we come in and say, hey, maybe this time's different. And yeah, we got a little bit of a chop and it's kind of shook us out a couple times, but it was different, was it not? Right? We got a massive drawdown, 50% over the course of 3 or 4 months. So then macro top, macro top, macro top. If you recall, this is where we first said, hey, this is macro market environment shifting. And as long as we're above those 4 hour 200s, really not too much of a bearish argument. Meanwhile, our daily is creating higher highs and higher lows, right? All of these are higher highs, higher lows. So we're just saying continue expecting up, continue expecting up, continue expecting up. And then, oh, wait, that's a lower low on the daily. We're below the 4 hour 200s. We slightly sort of tried to reclaim them, right? But we also acknowledge that break in our daily structure where we were finding higher lows and higher highs, and we just found a lower low. We know that that's a break in our structure. So now we're saying, okay, if we lose these 4 hour 200s again, that means this is the lower high to our lower low, meaning downtrend on the daily. Once we lost those 4 hour 200s, what happens, right? Daily market structure continues in the form of another lower low. Then lower high, higher low, higher high, back above 4 hour 200s, nearly saw them tested, macro bottom, higher highs and higher lows on every time frame. Losing them is scary. I'll put it that way, right? So the fact that you would downtrend into them is also pretty scary. You do not want to lose your 4 hour 200s, right? It really is a sort of domino effect. Breaking the daily market structure means that you might lose your 4 hour 200s. Losing your 4 hour 200s probably means that you come down into this 59K weekly demand zone. And at that point, trading below 4 hour 200s in a downtrend amongst all time frames probably means that you lose that 59K weekly demand zone. Losing the 59K weekly demand zone might mean a macro top for who the hell knows how long. Maybe into 53K, maybe into 49, maybe into the 200 daily moving averages at 48K, maybe a bear market into whatever, right? Maybe Bitcoin goes to zero. Nobody knows at that point. At that point, you just want to assume downtrend, breakdown from one support, head to the next, right? Not fight that. And maybe be the speculative investor who's just dollar cost averaging all willy nilly, or wait for strength to show up again. So we're in a really weird spot right now. Technically speaking, this is still an uptrend on our 4 hour. These are all higher highs and higher lows. And we talked about this 4 hour uptrend a couple days ago when it first showed up, right? When this created a higher low, and in that next 4 hour candle, it created a higher high. We said that's a 4 hour uptrend. From there, we went on to create higher high. That higher high saw a pullback. That was that range high on the 15-minute. We see higher low, higher high into resistance. This is still technically a higher low. I really can't say that I'm confident that this higher low holds because, I mean, truly, there's nothing here. Like, like if we're looking for a higher low, yes, it would be amazing if right here, right now is the bottom and we just continue and we create a higher high again, but it would sort of be illogical. It would be very choppy, weird price action, not much logic or reasoning to it. There's nothing here, right? There's no logic or reasoning, in my opinion, why we bounced from here. Because when we looked at this, the only way that we assessed it was in the form of the range on the 15-minute chart. So we talked about this range right here, right? This is when we first acknowledged, hey, by the way, Bitcoin is in this massive range on the 15-minute, and we just broke down from it. We should expect expansion towards the downside because now this range has made its its decision, right? We've made up our mind on which way this range is going to break. And from there, we tap that, oh, whoops, we tap that higher time frame demand zone, right? So it's more like a 4-hour demand. And we've had this marked out for quite some time. We tap that demand zone, we come back up into the range, and we're rejected. Our range lows are now acting as resistance. We find a higher low, again, no reasoning to why we find this higher low, but we find it. Yay, congratulations. If you're bullish, take a deep breath. Amazing. Higher low, higher high into mid range, back test the range lows. What do deviations imply? What does backtesting range lows imply? It implies mid-range and then range highs again, right? And we discussed that too. It was mentioned in the market updates. It was mentioned in Discord. We've mentioned it several times, just trading range philosophy always, right? We want to expect expansion. That's this. We break down, we expect downside. If instead we break back inside the range and confirm that this is in fact a deviation rather than the start of a new trend, then we probably head to mid range and then range highs again, right? And what is the norm here, right? Because a deviation means you're doing something other than the norm. So, what is the norm if you're trading in a range? Norm is range lows see mid range and range highs. Range highs see mid range and range lows. You repeat that over and over and over again until finally something happens, right? That is range trading. That's all that this means. So when you fall back inside the range, you lock in a deviation. You imply that you're going to head up to mid range, you're going to head up to range highs. Once you get to range highs, what do you expect? Mid range, range lows. Once you get to range lows, what do you expect? Mid range, range highs. Didn't get that. You got mid range. Congratulations, you took one take profit off, and you're stopped out either at break even or profit or slight loss or whatever. But just the same, you're expecting expansion here. You are breaking down below the range. You expect a further breakdown. You instead deviate back inside, mid range, range highs. Now you break out above the range, right? So it's just we're ranging, we deviate. We're ranging, we deviate. And it happens consistently over and over and over again. So to me, the fact that we have deviated and fallen back inside this range tells me that this range is not truly as relevant as we think it might be, right? Because just the same here, when we break out above the range, we're expecting expansion away, just the same as we were expecting expansion here, just the same as we were expecting expansion here, right? We expand, we even back tested the range highs perfectly as support, high or low on your hourly, your whatever. No, not 4 hour, just hourly. High or low, high or high, still getting rejected from this 66K supply zone, fall back inside the range. What does a range high deviation imply? Mid range, range lows, right? So I'm expecting a breakdown from the range here, just as much as I was expecting it here, just as much as I was expecting it here, just as much as I was expecting expansion upwards here. And I will adjust if instead we fall back inside the range, right? And confirm another deviation. So what do all these deviations tell me? If we break down, we re-enter the range, break down again, only to re-enter the range, break out of the range, upside, only to fall back inside the range. What does that tell me? It tells me that this range is not the hey, this time is different indicator for when have we finally made our decision on what the market is going to do. It's not, right? It's not relevant. We're seeing moves outside of it only to fall back in and continue going sideways. So it's not significant, right? You can trade it on lower time frames if you're sitting at your computer watching Bitcoin with a cup of coffee, ready to put in those 8 hours just staring at this screen, right? Then you can trade this. The reason I went so in detail on those market updates and in Discord is because for those of you who are willing to do that, it is very clean to do that, right? This price action is nice. It really is. But that doesn't mean that it's significant, right? So now we need to take a step back. Now we need to say, all right, what would be significant? Well, we've had this zone marked out as resistance. It's gotten respected twice. We've had this zone marked out as demand. It's gotten respected twice. Local bottoms, local tops. So now I'm in a position where, yes, we can trade the range if we want to, but really the significant event is above 66K supply probably means new all time high. Below 63K demand probably means 4-hour 200 moving averages, right? Then we reevaluate from there as well. If we break out above this supply zone, it is simply price discovery, higher highs, higher lows, bears are dumb, turn your brain off, look for fib targets, right? Whatever. If we break down, it is, hey, look for the 4-hour 200s. If we break down from those, hey, look for 59K weekly demand. We break down from those, hey, look for 53K daily demand. We break down from those, hey, look for 48K where the 200 daily moving averages are and that 47K daily demand, right? Level to level towards the downside. So we're not in a position to be taking bets for one way or the other. Simply put, we are currently bullish on the high time frame, either waiting for that to continue after this chop is over, or we're just not going to continue it. We're just going to flip bearish amongst all time frames, right? So we're not in a position to build something right here, right now. If you want to do that, the areas would be your invalidation levels, right? We say this a lot. A lot of the times, your invalidation is also your ideal entry. So if you lose the 4-hour 200s, what do we expect to happen? At the very least, a deeper pullback into 59K, right? At the very worst, a bear market. So 4-hour 200s are probably where you want to take that bet, right? So that's where we're at for the market overall. And again, none of this really should be news to you guys. I've tried to sort of put this in perspective and go really, really in detail. And to my pleasure, price action has beautifully respected that analysis, right? But I do understand that reading things in the form of, Discord text or a market update is much different than me saying it. So um, hopefully everybody already kind of understood this, but this is just kind of a nice refresher, right? So that's where we're currently at for Bitcoin, ranging, looking for downside into 63K. That's going to be the, hey, if we lose that, this time's different. If not, we just bounce from support, and we expected that because support is support, right? We're just going sideways. So we'll see what happens, but I mean, not looking too pretty at the moment. Move on to ETH. Very quickly, any questions or comments or anything? Nope. Cool. ETH USD, pretty similar context. Higher highs, higher lows on the daily. And can't really make too much of an argument as to why this time would be different, right? You can zoom in and look for signs of weakness. You can talk about 4-hour market structures, things like that. And we're going to do all of that. So let's just go ahead and jump right into it. 4-hour market structure for ETH actually is technically bullish at the moment, and we're looking to hold a higher low somewhere higher than this low. So what does that tell you? If this is if this market structure breaks, then maybe this isn't the lower low on the daily, or maybe it is the higher low, and you put in that lower high, and that's a market structure break. Maybe you see a deeper pullback into 4-hour 200 MAs for ETH as well, right? Because we know, hopefully, we know that ETH 4-hour 200s are also very significant on the macro sort of scale. Right? So kind of at this like weird point where it's decision time. Are you going to keep breaking down, or do you find that higher low? Do you continue to break out and up? Do you show the strength, right? Or do you show continuation from the strength? And we kind of gotta zoom in a little bit more too. So hourly 200s. If you recall, we said hourly 200 moving averages for ETH were the higher lows on the daily consistently, right? Every single time they were tapped, they acted as that daily higher low. And then we know that our daily is just saying higher highs, higher lows, price discovery. So it was just, hey, tap your hourly 200s, find that higher low, price discovery, right? Continuously. Turn your brain off as long as we're above the hourly 200s. Not much of a bearish argument. Just look for price discovery. That's not all too relevant right now, is it? Right? So, of course, when we trend trade, we know that trends are made to be broken. We are putting ourselves in a position to be wrong at least once, right? At worst, several times. So, what do we need to do here? We really need to adjust, right? Our hourly 200 MAs analysis, because we went relatively sideways in like this consolidation market structure, has been rendered useless because we're not trending anymore. This isn't a trend. This isn't, hey, higher highs, higher lows, 4-hour market structure, anything like that. It's just sideways. It is simply you have some demand here and you have some supply here. Breakout above one probably means expansion. Break down below probably means expansion. That's it. Nothing else to say. We can sit here and assess the 4-hour market structure as we briefly did. We can say, hey, if we do find a higher low and we continue breaking out, then that just means that, we truly are uptrending. We truly are continuing this, hey, this higher low on the daily, higher high, price discovery, turn our brains off, brains or bears are dumb, all that stuff. And instead, if we just kind of chop a bit, well, thank God we didn't fall into a trend bias, right? Whew, thank God. Because all these times we're saying, hey, macro bottom, macro bottom, macro bottom, macro bottom, macro bottom. This scares me. Truly, it does. Like, there's no way I'm still holding ETH if I'm in a long or anything like that. That scares me. That makes me think, all right, level to level, break that one. Maybe this time truly is macro different. Next level after that, next level after that. Who knows, right? So that scares me. Reclaiming makes me think, oh, okay, it was just a fluke. We're all good. We're still trending. Still a higher high, higher low. We even saw that higher high, pulled back into the hourly 200s, tested them as local bottoms twice. Again, found a higher low in the daily, kept it moving. Right? All of a sudden, this starts to look scary. So when you reclaim, when you eradicate that scariness, you expect, oh, it's just a fluke. We're still trending. We're still good to go. And rather than the continuation, higher low, price discovery, higher high, blah, 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 yada, yada. You got, oh, look, we're bullish again, we're bearish again. We're bullish again, we're bearish again. We're bullish again, we're bearish again. You hated your life. Somewhere after here, you should adjust. You should stop saying, all right, the hourly 200s are my invalidation. You should now look for a new invalidation. What is, or what dictates this time being different, right? We did the exact same thing for Bitcoin in May of 2021, right? When we were going sideways, we talked about those 4-hour 200s and we said, yeah, we use them as macro bottoms, use them as macro tops. We had that couple weeks or so where they got completely disrespected before breaking down 50% and using them as a macro top sort of trend once again, right? So we have to adjust constantly, and that's what we're doing for ETH. Our analysis has worked beautifully. Like, it does not get much better than this. You cannot hope for a cleaner trend than the one you've gotten for ETH. You can't. It's not working anymore. If you're approaching with a static approach to a dynamic market, right? And every market is dynamic, then you're going to be wrong at least once. Make sure that at least once is only once or twice or 3 times and not 6, 7, 8, 9, 10 times, right? Because that's what this turned into. So that's ETH USD. Very simple, same sort of gist as Bitcoin, same scenario, same situation. But of course, ETH is still pretty much stronger than BTC, I would like to say. So when we look at the ETH BTC chart, you can kind of see that. We were expecting higher highs and higher lows on the daily. This is a higher high, higher low, higher high, higher low, higher high, higher low. What do you expect here? A higher high, and instead you were given a lower high. So from that, one of two things happen. You either create a lower low, and all of a sudden you are now downtrending on your daily market structure, or you find a higher low and you shift into a consolidation. And at that point, you are expecting lower highs and higher lows until eventually something changes. You either break that structure to the upside or to the downside, and you take it from there. If you break up, you know that you just created a higher low. This would be a higher high. You're now uptrending. If you break down, you just created a lower high, a lower low. You're now downtrending. It's that simple, right? So we put in that first break in our structure. If we were going to find a higher low on the daily, this is the spot to do it. You really can't go below this and not fully be at risk of breaking your structure to the downside. So slight bounce here. Let's try and see if we can figure out why we bounced. So we have 4-hour demand zone. Nice and clean, straight across, consistently tested as support and resistance, and nicely respected most times. All right. So we tap it again, bounce, lower high, higher low, right? Just looking for this demand zone to hold, higher low. That was your hopium scenario, right? At that point, when you lock in that lower high in the daily, you're just saying, oh my God, please find a higher low. Please consolidate. Please start going sideways below major resistance before eventually breaking out and heading up for another 20% or whatever, right? And congratulations, it happened. I wouldn't have necessarily expected it. It is a hopium scenario. You are counter trading the local trend, right? And then it's just kind of this meltdown where your lower time frames are bearish. You smack your face into 4-hour demand zone, 4-hour 200 EMA just slightly below it, and you bounce. So now you have a breath of relief. are now possibly going sideways on your daily time frame, right? Depending on how this candle closes in the next couple hours. So ETH BTC also threatening sideways. So now we have Bitcoin going sideways, ETH USD going sideways, and ETH BTC going sideways. And hourly analysis for ETH BTC as well. Actually, I think it was 30-minute. Yeah, 30-minute. 30-minute 200s, local bottoms that entire run upwards. So we're saying, all right, no real bearish arguments until you lose them. Local bottom, local bottom, local bottom, local bottom. Oh shit, wait. That time's probably different. Deep pullback, 4-hour demand, reclaiming strength. Nope, this time's not different. High or low on the daily. We're expecting the higher high, uptrend, breakout. Let me know when ETH flips BTC. Lower high. All right, but we're still trending. So until we lose these 30-minute 200s, then we're good. We can eventually, invalidate this lower high and just continue going up and whatever. It's all good. Oh, lost those two. So now this is not being respected either. So truly, it's sideways. And even though I say that, it is being respected pretty well. I mean, regardless, right? Consistently seeing them be used as support and resistance. But can't imagine you want to trade ETH BTC scalping it like this. Probably not too appealing. Good luck trading a 4% range on ETH BTC. Have fun with that, right? But nonetheless, the idea is the point that I'm trying to get across is this is going sideways as well, and there's really not too much of an indication on which way does this sideways break out. Does it go up? Is it fuel to the fire to the overall uptrend, or is it the start of a new downtrend? I have no idea. All I know is we're going sideways. We're just chopping in a range, right? So if our market structure technically falls into the exact same analysis, great. Just gives us even more conviction that we are going sideways. And if it starts to range and get choppy and whatever, we will just simply say, all right, good thing we assumed sideways anyways. And if instead we break up and out, we can shift into a bullish mentality. If we break down, shift into a bearish mentality, right? We also have those 4-hour 200s right here, which are nice and clean, macro bottoms and macro tops for the past 3 months. So you would think losing those probably means doom, right? So until you lose those, there's still bullish arguments to be made. Let's go ahead and discuss Bitcoin dominance. This is 4-hour. Bitcoin dominance. We came in, we said we're looking for the new trend to hold on a 3-week to couple month long to nobody knows how long. Just sort of assume that the trend is going to continue trending and we're not late to the party and the party's just started or whatever on the macro scale of things. As soon as the 4-hour 200s were lost, right? As soon as price action starts to break down from these moving averages, which have consistently marked the start of a 3-week to maybe a month long to maybe multi-month long trend, right? And shift these moving averages bearishly. We said, all right, we start sending out invitations for that altcoin party, right? And can't really shake me out of that. Of course, there's going to be first signs of strength. There's going to be, breaking a local trend, maybe finding your low on your 4-hour, things like that. But overall, the macro market environment for altcoins looks appealing against Bitcoin. As long as we're still below the 4-hour 200s, as long as their slope looks like this, right? They start to go sideways or even bullish, that's when we really need to adjust, right? And price action starts to reclaim them, that's when we really need to adjust. So until then, it is looking very appealing if you're heavy in altcoins right now. Our hourly chart, this is really what I'm referring to when I say first sign of strength, first sign of weakness, things like that. We're just kind of looking for whatever the local trend is. So was the hourly 200s, and even prior to that, we said, well, can't really see it, but we said hourly 200s, and this was first sign of strength. We use them as some support for the overall new uptrend, right? And so once we lose that uptrend, our macro invalidation or our macro bias is here, right? Just like back there was here. So on a macro scale, we adjust here. On a macro scale, we adjust here. But our first sign of strength was initially down here. Our first sign of weakness was initially up here, right? So we adjust to the local trend and then slowly shift our mindset into that higher time frame bias. It's not just, oh, on the stop on the stop of a dime, or how does that saying go? I have no idea. Right? It's not just, oh, you just stop and immediately uh shift that mindset from one into the other, heavy bearish or heavy bullish into the other, just on the snap of a finger, right? You ease your way into it, you acknowledge the shift in probabilities, and you fully adjust. You acknowledge the shift in probabilities. The reason you don't fully adjust is because we're still below that macro sort of invalidation, right? So, congratulations if you didn't fully adjust, if you didn't say, oh shit, this first sign of weakness, that is doom, right? That is going to be the start of doom. We're going to go up. Altcoins are going to bleed for the rest of forever. We're going to capitulate. Oh my God, we're screwed. Congratulations, right? If you took some profit, probably feeling pretty good. You can either you could have either added back in that profit lower and have more bang for your buck. You could have just enjoyed it and walked away, or enter it back at break even, maybe slightly above where you exited, right? And continue respecting the higher time frame trend. So now this is starting to go a little bit choppy. Momentum for these moving averages is sideways, right? So notice we had sideways, and then it started to go up. That momentum sort of stalls out again, but eventually up again, and it just keeps going, right? And we go sideways a little bit. We say first sign of weakness, goes down, slightly up, first sign of strength, and sideways. So lower time frames kind of just hesitating, not really doing too much. Of course, our macro bias is still in favor of continued downtrend, right? And that's just us simply saying, hey, level to level, as long as this is still our trend, right? So until that's no longer our trend, we will continue anticipating level to level. Really not too much else for me to say on dominance. I think that's really about it. So anything that you guys want to see from me now that I'm done rambling? What is that saying? Is it on the stop of a dime? Am I stupid? I can't think.
It's on the drop of a dime.
On the drop of a dime? Okay, thank you.
Big drop, yeah.
I appreciate it.
No problem. I think so. I don't know.
I don't actually know what I'm saying. I'm just throwing out random analogies and stuff to try and
We
get a
get
point
you though.
across. Yeah, yeah. As long as you guys understand what I'm trying to say, that's all that matters. Yeah. So any stopping on a dime? Okay. Turn on a dime? Alright, well, it seems like everybody has a different answer, so maybe I'm not as dumb as I thought I was. I can just kinda throw myself in the crowd and say, it's probably one of those. So, um, alright. So we got RNDR and ACH. I've never heard of either of those. What a chart. Okay, RNDR. I'm gonna say daily supply there. Well, actually, it's demand now, but and daily demand here. Might have like a 4-hour level straight across here, 110. I'm ignoring this price action at the moment because there's nothing there for me. But I will take a fib draw. And I want to try this high to low too. Hold on, wait. All right, so I actually like this one better. Hold on. Let's see. TOB have more price action? No. All right, I think we're gonna roll with this fib, at least for now. And I'll just say price action nicely respected my you know biased fib draws, my magic numbers that I just drew in hindsight after already seeing what price action did, respected it pretty nicely. So 1.618, 2.618, nice rejections on both of those. 3.618, you see a little bit of a wick there, maybe a deeper pullback intraday, who knows. 4.236, that'd be another take profit for me after seeing how well these first two were respected. Definitely want to be selling some at these fibs, but that price discovery mentality makes it to where even though I'm taking profit and I'm ensuring that I see some sort of benefit from this chart at the end of the day, I'm still keeping a lot of my bag for the next fib target, right? And on pullbacks, I'm looking for that invalidation, whatever the current trend is. And unfortunately for this, it's probably something really, really drastic because this is parabolic. So it might be a trend on like a 15-minute time frame or something. So that's unfortunate for me, but parabolic, so high risk, high reward, right? You're either that person who jumps in and is willing to take that bet and buy those 15-minute 200s, 5-minute 200s into price discovery for the next 80% leg upwards, or you're sitting on your hands, right? You're too afraid to take that bet. Personally, I'm the person who sits on their hands. I can't take these bets. Like my mindset folds. Everything I've worked so hard for, trying to remain calm, trying to maintain positions, all that stuff goes out the window when I'm trading, 30% moves on a 5 to 15-minute time frame. So, I know myself, can't do it. I tend to hurt myself more if I try to do it. So, I avoid it. Unfortunately, at that point, this chart for me is either you bought this anticipating it to be a breakout high or low, flipping of a supply zone into demand on your daily and rode it up into price discovery because truly there's no resistance here, right? So once you break above this region, what's stopping you from seeing price discovery? My answer would be nothing. So 1.618, 2.618, 3.618. You either built that position on that flip of the retest at this daily demand zone, or you're sitting on your hands. And that's the way that I would see it. And then the third option is you're trading whatever that trend is, whatever it may be. Maybe it's 4-hour market structure. So let's assess that. Higher highs, lower high, higher low, a little bit of a consolidation, higher high. Now it's uptrend, right? Everybody see that? Oop, uptrend now. So uptrend, higher high, More consolidation, sideways. Higher high again, uptrend. Continue that. This is currently your higher low on your 4-hour. If that's your invalidation, I feel sorry for you. You're waiting for 35% drop from current price action to say, oh shit, maybe this time's different, right? You're not going to make it, right? I hate to tell you, you're not going to make it if that's your invalidation. So we have to keep zooming in, right? And this is my point, is I'm not comfortable with just continuing zoom in, zoom in, zoom in. So now hourly market structure. Okay, well, it's a lot better. It's still not too helpful though. Your hourly market structure is here, right? And then this was your high, this is your low. Your hourly market structure says below 405, this time's different. That's still what, 20% drop? 17%? So now you have to keep zooming in. A 15-minute. Our 15-minute 200 is relevant. Somewhat. Actually, yeah. I don't think it's going to get much better than this. Maybe 30-minute. Kind of like a mixture of those two, right? So I would say your 15-minute is like that first little warning sign, and then losing the 30-minute is truly the, hey, get the fuck out. Like, you don't want to own this coin anymore. Nobody knows how deep this pullback's going to go, especially because it's so parabolic, right? Maybe the uh, entire thing just crashes 60% in a day, something stupid, right? Because this is crypto and that shit happens frequently. So the 30-minute 200s would be my true invalidation, and the 15-minute 200s would be like my warning sign, which also means my 15-minute 200s are my ideal, like, quick scalp. Let me get in, let me look for that next 10% up and get the fuck out, right? On a higher high on the hourly. Get out, take my profit. And my 30-minute are, hey, whatever I sold along these fibs, let me add it back in on my 30-minute 200s. Let me look for that higher low on our 4-hour chart. Let me look for that, continuation into price discovery from this point. And if we don't do that, then we're probably doomed, right? Your ideal entry is also your invalidation in this case, as well as I would probably say most cases. So that's how I would trade this. I won't be trading this, but that's how I would do it if I was, looking at this coin. Which, I mean, all power to you. If you have the willpower, the mental strength to come in and trade this, great. It's ideal scenario, right? It's higher highs, higher lows, price discovery. Uh, X and Y are my invalidation, and until we do that, we're going to the next fib. Probabilities are on my side. Risk reward is on my side because nobody knows where this stops, right? This is an ideal token to want to trade. Personally, can't do it. So, being completely honest with you guys. What's the next thing? ACH USD. What's this? Stop on a dime. Oh, cool. Crocodile tears. An accident waiting to happen. Cat got your tongue. Pay the piper. I've never heard of any of those except cat got your tongue, but gotcha. Cautiously bullish on a dime. All right, ACH USD. Mark out a daily level here. Or really, we could use these wicks too. I'd be interested to see what our range volume profile says. I'm going to say daily demand there. And daily demand here. Yeah, there's definitely demand there too, but all right, so not bad. I think we did pretty good. Marked out this one, nice volume spike. Marked out this, little spike there. Marked out this one, and that's probably the most obvious one we didn't mark because it's just so far below it's not relevant right now. But truly, as our fixed range volume, I shouldn't have deleted it. Above this region, right? Once you really start to close daily candles above here, I don't see what stops you from heading into price discovery again. So I think, we have this volume pocket and that's anticipated supply. And then we're wicking into something like a 4-hour supply zone. But our daily just can't get over this level. So once our daily does get over that level or our 4-hour cracks above that supply zone, which I'm sure we'll be able to draw out in a second, price discovery, right? There's nothing stopping us. Um, the whole idea behind these gray boxes that I'm drawing is just that that's a spot or that's an area where people have gotten used to either buying or selling. So then therefore that creates volume at that region, right? So it's kind of like a self-fulfilling sort of prophecy kind of thing. And then when you flip that, you continue with that analysis. Once you flip that region that people are so comfortable with buying in this point, you lose it. Well, they're still comfortable with that number, except this time they're just going to sell that number. So you see it act as resistance, right? That's the whole idea there. So this is that 4-hour supply zone that I was mentioning. So when we look at this on the daily, we have daily level, and our daily market structure is consolidating. So truly lower highs, higher lows, going sideways. So like rejected from here, find strength or a higher low along, who knows, hourly 200s maybe. I don't know. And just continue going sideways, and either you lose that trend and break down, or you break up, reclaim, head to the next one. You're now uptrending on your daily. Close the daily candle above here. 4-hour trades above here. Price discovery. So we really should mark out a fib extension. These are just targets now in the event of further bullish price action. Get rid of these squiggles. Zoom in. What are we trending along? Is it hourly 200s? They're not clean by any means, but I'm going to say yes anyways. Let's see. Yeah, I mean, I don't think we're going to find anything too clean. Really. I'm going to say yes. I'm going to say once you lose these hourly 200s, there's really no spot for you to find this higher low on the daily. You probably just come back into this demand zone again, and you're just going sideways at that point. So really, what's your true trend? It would either be bearish or just range choppiness, right? So it's either not appealing to you because it's bearish, or it's not appealing to you because it's choppy. Either way, it's not appealing, right? It's just sideways price action. So you're expecting a lower high. You really are, somewhere lower than this high. So that means we can wick up and still fall and still be bearish, or still be consolidating on the daily, right? And we can break down below the hourly 200s and find a higher low and still be consolidating. So really, even though I want to say, yeah, hourly 200s, you know, look for those. And if this were Bitcoin, then I probably would say that, but it's not Bitcoin. It's whatever the hell ACH is. So I would just kind of say zoom out, focus on this consolidation, look to build positions on what might be higher lows, right? Higher low at demand. Look to build positions along that sort of stuff, And in the meantime, look for signs of strength. And those are really the only two ways that this is going to be appealing to me. So, what does this find higher lows along? I don't know. Genuinely, I don't know. Good luck. Uh, I'm not trading this chart. I wouldn't trade this chart because it's not clean, right? We can't find anything that makes sense for it. So truly, the only thing that interests me personally would be breaking out of that structure, breaking out above 1004, closing daily candles above it specifically, and then breaking out above 12 cents probably leads to price discovery. That's when this starts to look really appealing to me. But other than that, you can try and trade higher lows, consolidation, range, choppiness, whatever. I won't be. And the reason I won't be is because I don't know what the hell this is trending along. Just can't see it. Not with my system. So, H bar USDT. This actually looks really good. Is that price discovery? Yeah, it is. This looks really good. This is our last real daily resistance. I would think it's our last real resistance period before price discovery is sort of expected. I can't imagine that there's all too much here. And there's not, right? Look at this. Look at that volume. Look at this volume at that other demand zone that we have. Look at the volume at this demand zone. And then look what happens to the volume or to the interest in sellers to break out above like 40 cents. Who's going to sell? And not me, right? So if not me, then I can't imagine others will too. So yeah, it's really, really disappointing when you get this breakout into price discovery only to fall back in when you're fully saying, probabilities, upside potential, risk reward, higher highs, higher lows, bears are dumb, all that stuff, and it's true, right? And it is true. It's the same thing as in blackjack when you're playing 21 and you have a hard 16, the dealer's showing a face card, you want to hit. Probabilities say you should hit. If you bust off of hitting, you're gonna hate your life. You're gonna be like, ah, shit, I should have stayed. The dealer would have busted, whatever. But probabilities and the risk for the reward say that you take that bet. So even though it was not correct this time, I'm still gonna take that bet. I'm still gonna imply uh, or assume is the correct word. I'm still going to assume that price discovery is just as likely here as it was here. And I'm happy to be wrong. Me being wrong means we break our 4-hour structure. We lose this 40-cent demand zone. At that point, we're likely to break our daily structure, which is currently saying higher highs and higher lows, right? And we come down to 33 cents again. Maybe we don't hold that. Maybe we keep going to 27, right? So if you're right, the sky's the limit. If you're wrong, you take a hit on the chin and you get back up and keep going, right? So, from a risk reward perspective, it's appealing to assume price discovery on H bar here. And from a probabilities perspective, it's also appealing. You are uptrending on the daily, right? You are uptrending into what is essentially price discovery because we just discussed there's nothing there. There is no resistance there. If you find it and you start rejecting and people start saying, 52 cents, that's going to be resistance, and we form supply there, and every time we come up into 52 cents, it just gets rejected over and over and over again. Fine, sure, cool. But at the moment, there's nothing stopping you, right? So you're essentially in price discovery. So when you put it like that, this looks really good. And the 4-hour 200s, even though they were pretty choppy as of recent, we historically respect them pretty well. 4-hour 200s, macro bottom, macro bottom, macro bottom, top, 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 right? A little bit of a bottom, lose it, top, 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 top. Oh shit, maybe this time's different, and it is. Macro bottom, 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 and oh shit, maybe this time's different, and it wasn't, right? So you adjust here just as much as you adjusted here, just as much as you adjusted here, except this time it didn't work. You reclaimed it. So now you're saying, okay, this is a fluke. We're good to go. Let's continue that price discovery, higher high, higher low on the daily. Everything's fine and dandy. And that happens. So now you're saying, oh shit, we're fucked again. Oh shit, no, we're bullish again. Oh, wait, we're fucked. Oh, we're bullish. Oh, we're fucked. Right? Finally, you start to shift. You guys are laughing at right now, hopefully, but that's literally the mind of of people trading this chart. If you fail to adjust into, all right, we're going sideways, right? So if you're still trading a trend where there is no trend, you hated your life for all of this price action. So finally, we start to break out, show some strength, find support, higher low in the daily, break out again, wick of a pullback, find support again, right? So as long as you're above these 4-hour 200s and as long as you're above this daily demand zone at 40 cents, you cannot tell me why H bar would not go into price discovery, right? If we're consistently using 4-hour 200s as a bottom, if we're above a key daily demand zone, a range that we just traded in for 2 months that we just broke out of, or a month, sorry, not two, that we just broke out of, we were trading in it for a month, right? We're uptrending on the daily. As long as we're still doing all those things and there's no resistance above our heads, you can't tell me why H bar would not see 1.618, 2.618, 3.618, right? Into price discovery over and over and over again. And I will only tell you, I will only give you the pleasure of saying, all right, you were right. Sorry for calling bears dumb. Until or once that happens, right? That's when I come in and I say, oh shit, bears were right. This is a weird fluke. My analysis, my probabilities, I hit on 16 and I busted, right? That's how I'm going to see it. Take the loss on the chin, expect downside, keep it moving. Move on to the next chart. So, really, I want to take a second to acknowledge that it's not the TA, right? It's really not. You can see this uptrend using Ichimoku, God theory, um, Elliott wave, trend lines, patterns. You can justify this price action however the hell you want. You don't have to use gray boxes and moving averages and market structure, but it's the mindset that makes you profitable. You take probable bets, you take a loss if that probable bet doesn't work out, lick your wounds, keep it moving. That's it, right? So at the end of the day, that mindset is really what makes you profitable, and it's not the TA. And this is coming from somebody who all of my wealth that I've ever accumulated over the past 6 years has been from TA. I'm telling you, 99% of trading is mental, not looking at charts. So that's really the big takeaway, and I think H bar is a good example of that. AR BTC or USDC? Well, you said BTC first, so I'm going to do BTC. Let's see. Daily level, daily level, daily level. I think that's about it for the daily. Might be some more on the 4-hour. I mean, this is a huge range, so there's bound to be something. And I would say right about here. And then probably somewhere along there. So we have daily level, daily level, daily level, 4 hour level, 4 hour level. Right. So now we're just working with levels, and now we want to ask, all right, is there any moving averages that this respects? 4 hour 200s are pretty solid. Yeah, pretty solid. Nothing too crazy. Again, adjusting the mindset, acknowledging that, hey, this is chop. We have a level here. We have a level here. Stop paying attention to the moving averages, even though they would have worked pretty well prior to this, right? And we are used to them working really well. It's not working here, so let's not remain static. Let's be dynamic and say above here probably means bullish into the next resistance. Below here probably means bearish into the next support. We finally break down, bearish into the next support, right? Test that daily demand zone, and really, how would you have known that this formed a daily demand zone here? Honestly, couldn't tell you. It starts off as like a 4 hour or like an hourly demand with these couple taps, resistance, resistance, support, and you formed daily demand. So it wasn't daily demand prior to this. So how would you have known to bid that region? I don't know. No clue, right? But it happened. So congratulations. You reclaimed the trend after respecting it as resistance. Huge breakout into your daily resistance, and here you are back testing the trend. So again, you either hold on to these 4 hour 200s, continue that bounce, right? Back up into here, back up into here. Who knows? Maybe you break out above that daily range and expand upwards into price discovery, whatever. Or you lose them and you fall back down. And now you're just range highs, see range lows, see range highs, see range lows, right? Over and over and over again. So this is either just going to be, hey, your range is ranging. What did you really expect? Or this time is different. Let's find support. Let's lock in a higher low in the daily. Let's keep it moving. Let's really break out of this range. So if there are a spot to do that at, this is that spot. Right? These 4 hour 200s with that 4 hour demand zone. That's where you want to look for that higher low in the daily. Anything above would maybe slightly interest me, and anything below does not interest me because at that point we're just ranging, right? XRP and DOT. Merck's gray boxes are magic, apparently. Um, XRP, technically higher highs and higher lows on the daily, so this actually uh, kind of reminds me of Bitcoin. Similar kind of movement here, where you're looking for that higher low in the daily. Or actually, maybe it's ETH that I'm thinking of. You're looking for that higher low in the daily, and you're threatening to lock in a lower high before continuing downwards, right? Your next support level is here. So once you break down, and there's really not too much stopping you from continuing that push downwards into 106 or whatever, right? Um, so I think lower time frames are going to give us more insight, and 4 hour 200s love to be respected. XRP loves these 4 hour 200s, especially recently. This is really the only time where they get a little bit ugly. Somewhere along here is where I would expect, all right, we're downtrending, lower high. These 4 hour 200s are going to reject us. They've acted as, macro bottom, macro top. We're going to get rejected, lower high, lower low, continuation. This is the start of doom. And do that, right? So we had pretty clean downtrend along 4-hour 200s, pretty clean uptrend along 4-hour 200s. That would make me think that this is the start of doom. And instead, we just reclaim them, we keep it moving. Macro bottom, macro bottom. So 4-hour 200s, once again, if you lose these, there's nothing stopping you from heading down here, right? This is currently your higher low on the daily. So technically speaking, you could come down, test these 4-hour 200s, use them as a bounce point, macro bottom sort of thing, and reclaim this 4-hour supply, head on to the next, right? Reclaim that. Daily's saying higher highs, higher lows, right? Uptrend, and that means breaking above 132, heading to 147, right? As this price range implies. Also means that this is resistance. So I'm still looking for the 4-hour 200s. If those 4-hour 200s are lost, this starts to look like a daily lower high to what would likely be a lower low, right? Lower than this low. So that's really the invalidation point. And again, that's also the ideal entry, right? We're consistently finding macro bottoms along the 4-hour 200s. Probably want to be buying the 4-hour 200s. If we lose the 4-hour 200s, probably don't want to own XRP. That's it. That is the analysis. Does the hourly tell us? Nothing too much. Hourly 200s, pretty decently respected, really. And that doesn't change with local price action. But it is sideways, right? Let's not forget that. So it is sideways price action. And your other one was dot. Um, all right, so dot we said was in a range, daily range. I think above that was price discovery. Yep. So same analysis here for dot. We're saying, this is price discovery above $40 price discovery. There's not much here, nothing stopping you. We form this like daily supply zone. So then we're saying, okay, dot is ranging. We're going sideways. We either break down below $40 and maybe this consolidation was the start of a new major downtrend, or we break up above 45 and we look for price discovery. So we broke up out of 45. We got price discovery. We're looking for 1.618, 2.618, 3.618, right? We're looking for higher highs, higher lows. So what's the invalidation? 4-hour 200s? Seems pretty good to me. 4-hour 200s consistently respected macro bottoms recently as well as most of this year. So that setup that we had drawn, even though maybe it got wicked out, I don't know when we had it drawn, either before this price action or after, I'm not sure. But that setup, just slide it over, currently just as relevant as it was on the way down initially, right? Nothing's changed. We're still above 45. We're still holding on to 4-hour 200s. The simple analysis is once you lose those regions, this is a top, right? Your higher high on the daily that you're expecting to find a higher low is out the window. You probably come down into $40 again. Maybe you break that. Maybe you head all the way down into 35-ish. Maybe you head down to 28. We don't know. We don't care. We just know that we don't want to be in dot at that point, right? So um, again, invalidation, ideal entry. This is quite literally what my setup would look like. Or just waiting for 4-hour candle closes below here, and that would tell me that this time's different. So that's nice, quick, easy. um, the other, so there's always going to be plan A, plan B. If you're taking swing setups, the beautiful thing about taking swings is either your plan A is going to work out, or maybe our plan A is our entry like way down here, and price action is at the moment here, right? We haven't gotten our entry yet, and we're either waiting on our hands or we wait for strength, right? If you're pulling back into an ideal entry zone or a higher time frame support level, that means you're downtrending on your lower time frames, right? So you lost these hourly 200s, which been pretty nicely respected, meaning if you don't want to take the swing setup and say, all right, this area needs to be higher low on dot on the daily, and or else we're doomed, right? If that's not you, if you don't like buying downtrends into support, now you're buying strength. Now you're buying the uptrend into the higher high rather than looking for the higher low, right? So you have plan A, and that's that speculative bet. Hey, let me build a swing long. Let me get in early. It's a little bit higher of a reward, so maybe it's worth it, right? And by a little bit, I mean it's like 3R more. So maybe it's worth it. Let me weigh out, maybe I want to take this swing long and take the slightly lower probability bet, or maybe I just don't see that 3R as all too valuable and I would rather have the probabilities. I'd rather be trading whatever the current trend is. So I'll wait for that higher low to get put in. I'll wait for us to show strength again, and then I'll jump in on the trend. But oh, wait, I also have to consider that maybe when we do show that strength, that um, I'll be asleep at night. And or maybe we show the strength and we just bust upwards in this crazy hourly candle 5% and I never get my entry. Right. So maybe there's a slight opportunity cost that I'm paying by not taking the swing setup that's at my entry right now and instead waiting for the more probable setup. Right. Congratulations, you're now a trader. Once you start to sit there and weigh out all those things, okay, I could do this. There's plan A that comes with these pros and cons, and or I could do this. That's plan B that comes with these pros and cons. Once you start to do that, now you're thinking like a trader. So it's not just always um, buy support, watch number go up, right? Ren USDT. um, Really, we should turn this off for the daily. Looks a lot cleaner now. So I will say Fibs getting respected pretty nicely. Someone's going to see this and say, oh, look at that. This Fib is acting as support. And keep in mind that if you're drawing a Fib from high to low, you are looking for resistances, right? The 0.236, the 0.5, 618, 7.86, all those 1.618, 2.618, 3.618, right? All those are resistance. That's what you're looking for. You drew from high to low. the extensions are going up. You are looking for resistance. Typically, what tends to happen is you find your resistance, you form a supply zone along it, and then that supply zone starts to get used as demand. So then it looks like your fib is just doing all the work. When really it's sort of like that self-fulfilling prophecy sort of thing, where um, people saw something as resistance, they started to trade at it, they formed supply, supply breaks, so then it starts to get used as demand, right? So what the hell is this? That's nice. Um, why am I just now seeing that? Uh, so yeah, just get that out of the way. Quick TA lesson for everybody. So I will say, you could say 4-hour demand zone probably is a little more accurate, or maybe daily demand. 86 cents. And you wicked it. You are currently downtrending on your daily. If you're that buyer on Ren, supports make a logical buy areas, right? If you were ever going to reverse this downtrend, it would make sense to do that from support. Personally, I have no interest in just buying supports on downtrending alts. I'm only willing to do that for things like ETH, BTC, whatever, because that's the only thing that I apply that investor mentality to in crypto. But if that's you, you're looking to buy this support, you're looking to buy 200 daily moving averages because look how well those get respected. You're looking to buy 56 cents, you're looking to buy 39 over and over and over. And you're either going to be the genius who buys strength before the strength shows, or you're going to be fully expecting to be able to buy here because we're downtrending, and be able to buy here and be able to buy that, be able to buy that, right? You don't care. And you understand that we're downtrending. You're just going to be a buyer of supports until strength shows, right? So when we look at the 4-hour, we can see that this is not strength by any means. If we're looking at our daily market structure, higher highs, higher lows, these are all higher highs, higher lows. This is a higher low. What do you expect here? Higher high, lower high. Oh, wait, I'm losing my invalidation. My invalidation was also my ideal entry. Maybe this time's different. Since asking yourself, hey, maybe this time's different, negative 15% drop into your next daily demand. So even if you are that investor sort of mentality, just by acknowledging, okay, this time is either different or we reclaim it. We sort of just invalidate this. It's a fluke. I can buy back 5% higher and just keep riding the wave. Or this time is different. And at the very least, I'll expect to be able to buy 15% lower. Here's your buy, right? So you put yourself in a very pretty position. Now that we have formed that trend of, hey, this is downtrending, we broke our daily market structure, right? Now downtrending on all time frames, lower highs, lower lows, into one support, break that into the next. Why would we shift out of that mentality, right? Until, at the very least, that changes. 4-hour market structure goes bullish, start to reclaim your 4-hour 200s, higher high on your daily. If you form a higher high on your daily, it probably means you break out above this region again, right? So then it would look like that on your daily chart. Higher highs, higher lows, above key levels, reclaiming trends, all those things mean strength. Get back in, ride the wave. Until that happens, expect that your entry is gonna get hit. Do not feel FOMO on that bounce or this bounce or the other bounce or whatever happens next until strength shows. Then you can justify feeling FOMO. Oh shit, maybe this time's different. Let me not miss out this time, right? But until then, You can't justify it. There is no way. I'm sorry, you cannot justify having FOMO on something that is downtrending, right? So this Ren chart is a beautiful example of the mentality. You were inevitably wrong at least once, right? And in Ren's case, it was only once. You thought, hey, 4-hour 200s, let's go ahead and delete this. 4-hour 200s, macro bottom, higher high, into the next resistance, tap that one. If we reject, higher low, 4-hour 200s, buy, right? Higher high, repeat the process. Higher high, higher low, higher high, higher low. You were wrong this time. Once. Lower high, lose the 4-hour 200s, likely means lower low, and it worked. So even though you're wrong here, you're right for all this price action. So it shouldn't matter. Oh, whoops. And that is trend trading at its finest. Buy your bags, Merc. What are your bags? You probably have a lot of the same bags that I have. Oh, Ren is your bags? Oh, yeah. Not interested. Oh, whoops. All right. Mana USDT. We discussed actually that as long as we were downtrending on Mana, we're gonna look for this 4-hour demand zone all the way down at 150 because that was the only real zone that we had formed in any of this price action at the time. And truthfully, that's it's still really my analysis as for the 4-hour chart. I don't see any zones here to be taking note of. So that means we formed like an hourly supply zone and then continued the trend from there. So 4-hour market structures currently pending bullish. I don't know, it's weird. It was downtrend, right? And that's the thing that's telling us, all right, let's assume that this gets hit, right? Because we're either going to show strength or continue downtrending, right? So let's assume that this gets hit. And we found higher high. And since that higher high, we just kind of haven't stopped. And then now this is higher low. This looks to be a lower high. And we're threatening put in lower low. So market structure analysis, while it was very clean for all this price action, that's all one move upwards. This is a higher low that implies a higher high, and you've already broken it. Right? So you've already put in the first step into shifting your trend bearishly once again. So market structure was a useful analysis, and as of right here, right now, I'm going to say it's not useful anymore. Let's zoom in. Let's see. What were we trending along? What do we find support along? What can we look for to bounce from? All that stuff. So I'm going to say hourly demand zone formed here and even had like another zone along there. And last one, hourly demand here. Hourly 200s, do they get respected historically? Yeah, pretty well. Pretty well. Sideways price action, so definitely not there. But when we were trending, man, they were clean, right? So they're part of our analysis, which means that if Mana is going to find support, continue this push upwards into more price discovery, which it should, because there's not much here, right? There's no resistance there. We can't even draw a gray box on the hourly. You can maybe draw one here at 370, um, only after this move. But truly, there's not too much stopping you from heading up into a new all-time high, right? So we can say if mana is going to find support, higher highs, higher lows, into new price discovery, whatever, this is probably the area to do so. If you can't hold this region, probably see this hourly demand zone tapped, maybe the next one tapped. At that point, you're just going sideways, right? You want to zoom out and not be such a trend trader and be more like a range trader. But until then, we've found a new trend. If we were going to continue that trend, this is the ideal spot to do so. And what's your target? I don't know. Price discovery. Let's try using this wick. Nearly tapped golden pocket. That's pretty cool. That's 1.618. Setup that looks like this. All you need is one or two of these to play out, and probabilities are good. Obviously, risk reward is more than appealing. One or two of these play out, and you have a portfolio changing trade here, right? So continuation would be ideal. We'll see what happens. All right. Anything else that you guys want from me? I just yawned. I need a nap. Yeah, that's my fault. J Slice, if you're watching this, it's my fault that I'm not very active in on-demand TA. I've just been slacking. I've had a lot to try and juggle recently. I apologize. All right, guys. If nobody has anything for me, questions, comments, last minute TA requests, stuff like that, then I'll go ahead and get out of here. No problem. All right. Nobody has anything. So thank you guys, as always, for coming out, watching the stream. Hope everybody had a great weekend. Hope you got some value from the stream. Or at the very least, you laughed. And yeah, that's about it. So take care, everybody, and I will see you on Wednesday. Take it easy.